I've been running numbers on the Leominster rental market. I bet you can't guess how it stacks against Worcester and Boston. The answer's going to surprise you. Hi, I'm Jason, your local market expert and investor himself. Born and raised in Leominster, I'm here to help you with all your real estate needs, whether it's searching for a house, just want to know about the market, and want to learn about investing in Leominster. If you have any questions, reach out to me. My information's down below. I'm here to help you. As house prices skyrocket and investor demand continues to rise in the big cities, the average investor is being pushed out. They can't play in those big cities because the returns aren't there. Trust me, I don't play in Boston, I don't play in Worcester, I don't play anywhere near there. I invest in Leominster, Athol, Gardner, Fitchburg. Those are the areas I've had investments in or have currently investments in. In 2024, Leominster was featured on Realtor.com. Oh yeah, we made Realtor.com. And they said this Apple-obsessed city is going to be one of the hottest zip codes in the country. Not the state, not the county, the country. I could address why they said we're Apple-obsessed. Another time, might have something to do with a 169-acre apple farm that the city owns or our Johnny Appleseed Festival, but that's for another video. Anyhow, they cited reasons within this article, and I'll link the article down below, as to why Leominster is skyrocketing. It's the things I've talked about before and probably going to say in a bunch of other videos. Proximity to big cities, hour from Boston, commute, and a close-knit community feel. That's being mentioned every time in every article. You've heard about proximity, you've heard about close-knit community feel a couple times. Let's talk the numbers behind Leominster and why they say it's booming. First, I'm going to give you some numbers. These numbers are average house sale prices. The first one is between last year and this year. The average single-family home grew 7.54% from last year to this year. That's $35,000 difference. The average multifamily home grew 11.87%, or a $61,000 difference. You think those numbers are crazy? Let's talk over the last 5 years. Over the last 5 years, the average house price in Leominster grew 49%, or $165,000. But wait, there's more. The average multifamily home grew 43%, or $173,000. Let's take a step back now. Say you owned a single family or multifamily. It's a rental unit, right? Because we can rent multis or we can rent singles. I own a single family rental in Lancaster right now. And you bought this unit 5 years ago. You're now $173,000 richer just holding onto this house. And a cherry on top, somebody else will pay your mortgage for you. I'll take those numbers. But the average market gain per year over the life of all of real estate is 4% a year. So we should have gone up 20%, and we were up 43% and 49%. We more than doubled what the average was in the real estate market. We'll talk cash flow in a little bit, but isn't it nice that on top of the cash flow, you're also getting a 7, 8, 9% per year of home value going up? So when you do want to sell that home, you have this nice amount of cash coming back to you. On top of this, Leominster is still an affordable market, even with the crazy gains that we've had. The Boston market's $1.38 million for the average multifamily home. Worcester is $693,000 for the average multifamily home. And Leominster is only $558,000 for the average multifamily home. You'll see how this comes into play when we talk about down payments and stuff like that. As you can see, Leominster is more affordable, even though it has massive growth opportunities and massive growth that's been happening. Now let's dive deep into the numbers. Us investors, we love our numbers. You buy your house you live in on feelings. You buy your investment properties on numbers. So first, we're going to talk about cap rate or capitalization rate. Cap rate is a return on investment that you're expected to get in real estate investment based on the income potential of that property. It's used to compare properties that are in different areas and different likenesses to give apple-to-apple comparison so you can see which is actually a better property. So you compare multifamilies residential versus commercial real estate. You can compare Boston versus Leominster, which we will do. To calculate the cap rate, we have to take the net annual operating income, divide that by the market rate, and times that by 100. Now, the net annual operating income is a big deal. The word net. It's not the gross, it's the net. Earned minus all the expenses, except one caveat. The mortgage is not part of that. For this video, remember this. Net operating income divided by market value does not include the mortgage. Cap rate. I'm going to run some scenarios to show the differences in cash flow and things like that between the different markets. These scenarios are run at a 6.5% mortgage rate at a 25% down. Yes, there are many different down payments you can do. You can do a 3.5% FHA. You can do VA loans, you can do sub-2s and seller finances and all that fun stuff. We're doing an apples to apples comparison here. So we're going to do the average down payment of the 25%. Here's the cap rates in 3 cities. Boston has a cap rate of 5.81. Worcester has a cap rate of 8.04. And Leominster has a cap rate of 8.54. Those will mean something to you in a minute. So went online and use the calculators to find out what the net income is based on the cap rate and what the property's worth. As I said, Boston is about $1.38 million for the property at the cap rate of 5.81. That gives us a net operating income of $6,700 before the mortgage. Your mortgage is $345,000 plus the closing costs. Yes, you have to bring that to the table as a down payment. After the mortgage is taken out of your monthly cash flow, your net operating income, net, $158 a month. If you're a cash on cash person, which is another metric we love to use, basically, to explain it, it's how much time it's going to take me to get the cash back that I put into buying this investment. At $158 a month, it's going to take you 182 years to get that cash back for this investment. Was it worth it? Let's move on to Worcester. Worcester has a cap rate of 8.04, and that gives them a monthly take-home of $4,705. After a down payment of $173,250, your monthly take-home after the mortgage is about $1,420. Sounds a lot better now, doesn't it? Finally, let's talk about Leominster. Leominster's cap rate is 8.54, giving them a monthly net take-home of $4,035 before mortgage. Down payment in Leominster is $139,500 based on the average selling price we talked about earlier. That gives us a net take-home after mortgage of $1,390, about $30 less than Worcester. I wanted to highlight these two major rental cities to show how they stack up against Leominster. Boston is Boston. We all know what Boston is. But as you can see right now, with the mortgage rates the way they are and everything, you really can't make any money on an average buy in Boston. Worcester is another big place that everyone's been bullish on for a long time. Looking at Worcester, on these numbers here that I pulled, based on the cap rates, Leominster makes an average of $30 less a month than Worcester, or an average of $360 less a year. And almost getting the same cash flow, we're paying $34,000 less out of pocket to buy the house. I talked about cash on cash return earlier. We took that to the cash on cash return approach, right? $360 extra in rent, $34,000 extra to put down. That's 94 years is the difference to make up that. So Leominster's looking like a pretty good market. We have high appreciation. We're matching and fighting with Worcester with our rental prices, and we cost less to get into. Something to think about. We talked a lot of numbers. Let's talk about rental demand and tenant profile. I know that's something that's on everybody's mind right now. The average vacancy rate typically when we run numbers is about 5%. The vacancy rate in Leominster is 2%. That's awesome. Less than half. That shows a very, very strong rental demand in Leominster, which means if you manage your portfolio correctly, then you might have no vacancy. If you want me to talk about how to manage your rentals to make sure you have zero vacancies or low vacancies, comment down below. I'll make a video about that. Here's some reasons we have such high rental demand. I bet these reasons aren't going to surprise you. Number one, proximity to cities. Right? We have a lot of cities that we're within an hour of. Boston, Framingham, Natick, half an hour of Lowell, half an hour of Worcester, and many other cities. We're an hour of Springfield if you want to go work at the casino or something like that. All nearby, which means you could stay here and still get there in a decent drive. Also affordability, right? You're working in Boston, the rent out in Boston versus the rent in Leominster, that's a big difference. The rent right outside of Boston versus Leominster, that's a big difference. Families find it more affordable to live out here. They can get a bigger space, and they're trading off the drive time for the affordability out here. We also have a different class of tenant that we have around here. That's a seasonal tenant. We have a school up the street. We have Fitchburg State. Those schools bring in faculty that will come during the year, traveling faculty, traveling students that need housing. We also have Leominster Hospital that does employ a decent amount of traveling nurses that also need housing throughout the year. So we have rental demand for that takes up spots in the rental units themselves too. Kind of sum it up, we're a mix of families, young professionals, and retirees. Families love the affordability out here because they can get a bigger space for what they're paying for. And the young professionals love the proximities to big cities. Finally, let's talk about poverty rate. I always look at poverty rate when I'm looking at a city to invest in. You might be like, why are you looking at the poverty rate? Poverty rate speaks to the stability of the tenant, the ability to pay rent, and many other factors. Leominster has a poverty rate of 9.1%. This compares to other cities like Fitchburg and Worcester, where Worcester has a 16% poverty rate and Fitchburg has a 15% poverty rate. The lower poverty rate makes a more stable tenant with better financial security, which means they're more able to pay their rent, less likely to default, and less likely to go through the eviction process. If you need help navigating the Leominster investment market or just want to learn about investing, reach out to me. My information is down below. I'm here to help you. And there you have it. Leominster is primed for growth with cash flow and incredible investment opportunities. Whether you're a seasoned investor or just starting out, you don't want to miss out on this market. Hope this helped you guys out. I'm always here for you. I'll see you in the next video.